So let's get started. Today is Thursday and we will closely examine the market from a detailed wave analysis perspective. So on Monday, yes, I believe it was actually Tuesday when I held a live stream showcasing my open positions for everyone to see. And now, remarkably, today is already Thursday and not much has changed in my trading strategy or the market conditions. Most likely the market is waiting for tomorrow's news. It will be Friday, and tomorrow the unemployment rate is the most important news that all traders are anticipating, which may lead to increased volatility. This is likely connected to that recent news story. During such challenging periods, it's highly advisable to lose as little money as possible because I fully understand the strong desire to earn something. However, if there's no trending market to capitalize on, you simply won't make anything at all. For example, if we look at the euro-dollar over the last 2 weeks, yes, in this market segment where the market goes up and down, up and down, up and down, we have a sideways market and there's no money to be made here. In such a volatile market, our primary task is to minimize losses and patiently wait for a more favorable trending market. This could potentially occur tomorrow with the latest news updates or possibly even next week. Therefore, it is advisable to try to engage in trading less frequently during such uncertain periods and patiently wait for a more stable trending market. On the daily time frame, we still observe a clear upward trend consisting of 5 distinct waves, which is then followed by a corrective ABC pattern. The cycle completes after wave C, and we now have a new initial first impulse wave. Following that, there is an ABC correction that forms the second wave. Here, we are assuming that this could potentially signify the conclusion of the correction phase. Yes, here a descending channel has clearly formed, meaning that as long as the price does not break this channel upwards significantly, we can still consider attempting to sell. If the price breaks this channel, we will need to buy for the third wave. I also observe a descending channel in this context, from which there have been 1, 2, 3, and 4 notable bounces off the upper boundary. If we can effectively consolidate below this flag pattern, then it is likely that the price may experience a significant drop even lower than current levels. It is extremely important for any trader to understand that if the price of an asset can experience a deep correction, it is equally capable of entering into a strong impulse movement. Therefore, it is crucial to accurately mark channels, waves, and key levels in order to identify the most favorable points at which to buy during an impulse phase and where to strategically sell during a deeper correction phase. This understanding can significantly enhance trading decisions and overall performance. If the market fails to show any upward movement tomorrow in response to the news, thereby breaking out of this channel and instead moving downward, I will choose to hold my sales. We have a profit of $600. At the beginning of the week, we sold euros with our subscribers, and basically nothing has changed. It's already the end of the week, the market is stagnant, but we gained a little $600. Let's take a closer look at the 4-hour time frame for better insights. On the 4-hour time frame, we observe an interesting market structure currently forming. The recent downward movement could potentially be interpreted as an impulse wave, followed by what appears to be a corrective phase. Additionally, there is a noticeable sideways movement developing in the price action. Therefore, I can confidently assert that as soon as the price decisively breaks out of this sideways movement, either upward from this point, it will likely initiate a strong impulse wave, signaling the beginning of the anticipated third wave of growth in this trend. If there's a downward movement breaking the sideways movement, it will continue the correction. Everything occurring within this sideways movement is referred to as consolidation, indicating uncertainty, and during this phase, you won't generate any profit. We make attempts to sell, and we also try to buy and sell various assets, but ultimately, it often results in either breaking even at zero or incurring a minor loss. However, that's the current state of the market, folks. If we closely examine the recent market movements, let's take note of them. We experienced an entry into the sideways movement at 8:08, and today, remarkably, is already in September. So my colleagues, the euro-dollar has remained within this sideways movement for an entire month now, which indicates that everything is stable and fine in this situation. If you haven't made any significant profit on the euro, you need to wait for this consolidation to finish. Most of the time, the market tends to be in various consolidations, and when you learn to effectively identify them, just try to avoid them. Or trade like I do. I attempted to execute a trade here from the upper boundary during the bounce, which resulted in breaking the channel and subsequently moving downward. That we will reach this lower boundary. Further from this lower boundary, we can place either a break-even trade and wait for a breakout, or if there's a bounce, we will close at break-even regardless. We are currently still attempting to trade in this challenging market environment because it is not trending positively at the moment. That's why I'm still holding the sell position. Next, guys, let's move on to the dollar franc. USD franc is in the currency market. Once more on the daily time frame, we observe one strong impulse, followed by two corrective moves, then another third impulse, a fourth corrective phase, and finally a fifth impulse wave. The fifth wave usually completes the trend, and possibly this particular movement is identified as wave A, which could subsequently be followed by wave B and then wave C, indicating a potential downward trend. However, the ABC correction in the opposite direction should reasonably be expected to occur afterward. Therefore, I continue to hold my buy positions. Remember, at the beginning of the week, I also held buy positions. Everything is basically unchanged. The only thing I want to note is that the price is approaching the upper boundary of the triangle. If it successfully consolidates above that level, I believe we could potentially see prices rise even higher, targeting the 61.8% Fibonacci retracement level. However, a complete and deep ABC correction will likely commence following the anticipated downward impulse, which could lead to significant price adjustments. Therefore, I am confidently holding my buy positions on USD franc, and I am pleased to report that I already have $800 in profit. If the market opens tomorrow, or if there happens to be a breakout of the triangle pattern on Monday, then it will serve as a clear confirmation for continued growth. Additionally, if the dollar franc appreciates in value, then the euro dollar tends to decline significantly. Guys, there is a direct correlation between these tools, what we are currently doing and selling euros, and for dollar franc, I am holding on to buys. That's why everything makes sense and aligns here. We're just waiting for the triangle breakout and tomorrow's news. Tomorrow, there will be significant news that could also greatly impact the market. Let's switch to the 4-hour time frame. On the 4-hour time frame, I even shared this particular trading idea with you on both Instagram and Telegram. In my analysis, I highlighted that the first impulse is forming right here, followed by the second correction. This is succeeded by the third wave impulse. And then take a look at the correction labeled BC. It represents an ABC double threes correction, which is indicative of wave 4. Hey everyone, who would like me to send over the wave analysis book? If you're unsure about what this correction means, you can find clarity in the book. Feel free to message me anytime, and I'll gladly send you the book for free in electronic format. Take the time to read it thoroughly. Familiarize yourself with the content. There are various types of corrections and a wealth of information. It's crucial to read and understand this if you're a beginner. Here, I want to inform you that there will be a completion of Wave 4 and possibly a transition into Wave 5 soon. We observed that the market has made several attempts to rise this week, breaking through the significant level, retesting it, and then moving upward. In principle, we can continue the upward movement within Wave 5, so congratulations to everyone involved with dollar franc trades. I believe we should promptly consider updating the third wave and advancing to level 5 to ensure we are aligned with the latest developments. The fifth wave could potentially be the longest in this scenario because the third wave and the first wave are of equal size. This indicates that wave 5 may indeed extend beyond the others, making this upward movement both logical and quite possible in terms of market behavior and patterns. Also, if we consider the daily time frame for dollar franc, there is an ABC correction upwards, so the 5 should still finish. We congratulate you on the $800 purchase, which is why we hold it. I believe this is merely the beginning of significant growth and development. So let's move on, guys. Next, we have an important currency instrument. Let's take a closer look at the New Zealand dollar. As for the New Zealand dollar, everyone, I can already see your heartfelt words of gratitude today for selling 2 days ago alongside me, and I'm pleased to hear that you are already enjoying a profit from that decision. Here, take a closer look at the structure. It clearly follows this specific impulse model. First, we have the initial wave, followed by a second correction, then an upward impulse, a third wave, and finally a fourth correction, leading to an ABC pattern. Always keep in mind that the impulse is consistently greater than the correction, while the correction itself is always less than the preceding impulse. If you observe the sequence 1, 2, and then 2, which is less than 1, followed by 3, 4, and then 4, which is less than 3, then we ultimately have 1, 2, 3, 4. And we still need the fifth one. I also generously gave you the New Zealand dollar for free on Instagram as a special gesture. I believe that many individuals could have already sold this financial instrument and attempted to focus on the fifth wave. Yes, we set the stop at 4 and the take profit here at the 161.8 level, so we hold the sales on the New Zealand dollar, expecting a continuation of the decline, already with $500 in profit. The market is gradually beginning to wake up from its slumber. Furthermore, if we examine this situation from the viewpoint of a short-term trade, it becomes evident that the fourth wave is nearing its completion and will soon transition to the next phase. This downward movement was the first subwave, and this was the second subwave. Switching to the hourly time frame reveals the first and second waves, leading to the development of the third, fourth, and fifth waves within the fifth wave's framework. All time frames are interconnected. If you observe that the fourth wave concludes at this point on the 4-hour time frame, you can conveniently switch to the hourly time frame, then patiently wait for the 1-2 pattern to emerge, allowing for an entry at 3:45. The 1-2 pattern is essential for initiating the formation of the trend on the hourly time frame. Let's take a look at the hourly time frame. This is basically how it works in practice. Here we see the fourth wave completing on the 4-hour time frame. Here we have the movement. The first wave always consists of 5 subwaves. 1, 2, 3, 4, 5. So to find 1, it always consists of 5 subwaves. This is the first wave. Next, the second wave is an ABC correction, meaning this is the first and second. Then we have the start of the third wave, which goes 3, then 4, then 5. And this forms a complete 5-wave structure on the hourly time frame. The first wave, second wave, third wave, fourth wave, and fifth wave. Many people often ask me if it is indeed possible to effectively trade Elliott wave theory on the hourly time frame. It is entirely possible. When you fully comprehend the context of the 4-hour time frame, if you carefully track that the fourth wave will conclude at this specific point and observe the number 12, you can effortlessly execute trades at 3:45, leveraging ratios of 1.2, 1.3, or even 1.5, and subsequently take advantage of the fifth wave on the 4-hour time frame. Thus, the lower time frame shows us entry points in the direction of the higher time frame, allowing you to capture good movements on the higher time frame. They cover an impressive number of key points. That's why many individuals simply ask how they can effectively find the first and second waves in the process. The initial first and second waves are identified at the point where the fourth wave concludes on the higher time frame, or alternatively at the second wave if you are specifically trading the third and fifth waves. So these mentioned waves are the most actively traded ones. I also elaborate on this concept during my training sessions, and it's crucial to fully understand its significance. We are selling the New Zealand dollar and currently have a profit of $500. I believe there will likely be another decline in the market tomorrow. We are currently waiting for more news updates. So guys, let's move on. In the currency market, I have an open position, which is the British pound against the dollar, from the beginning of the week. In terms of the British currency, I once again analyze a higher time frame for a broader perspective, and then I make trades on a lower time frame, specifically towards the daily chart. So the general idea was that I recognized a 5-wave movement up to 5, and after the 5th wave, we usually have a correction ABC to the 50% Fibonacci level, or 38.2%. However, it's quite common for the market correction to extend to this level, so I interpreted this movement as wave A, particularly because we did not reach the expected Fibonacci retracement levels. After this downward movement, wave A was followed by wave B, and now I planned that this was the start of wave 1-2, with subsequent waves 3, 4, and 5, collectively making it all part of wave C. Wave C consistently contains 5 distinct subwaves, indicating that the daily time frame for wave C will comprise 5 major global waves when analyzed on the 4-hour time frame. Let's take a look at the 4-hour chart and see how it all forms. The most crucial aspect of trading is to identify the underlying idea or trend on a higher time frame and subsequently execute the trade on a slightly lower time frame for better precision. If you discovered the trading idea on the D1 time frame, then you should execute the trade on the 4-hour chart. If, for example, with the New Zealand dollar, you found the idea that wave 4 has completed and wave 5 will go down, then you need to trade on the hourly time frame downwards with the formation of 123. This logic is simple, and I think it will be useful for every trader. What does it mean for a junior trader to learn from a senior trader? By closely observing and following their guidance, you will make fewer mistakes, and your trading strategies will become clearer and more aligned with the market trends, ultimately leading to more successful outcomes. So the 4-hour time frame here for the dollar franc. Look at the structure. That is, it was an impulse. So I understand that wave C is completing on D1, and then I can build the first wave here, then an ABC correction is the second wave, and there was already a breakout of the channel. Plus, guys, look, this upward movement today was likely a closure of the imbalance. That is, there was an uncovered area that closed the imbalance. In theory, we can continue downwards like this within the framework of subwave 12, waves 3, 4, 5. Yes, indeed, all of this will ultimately be recognized as the third wave down. That's why I continue to hold the British currency. The trading plan is being followed successfully. We are eagerly awaiting tomorrow's news. I sincerely hope that nothing will disrupt our plans. Furthermore, I can confidently adjust my position to break even. Indeed, I'm just minus $38 away from break even. If this situation is merely an impulse correction, then theoretically, we should anticipate the next impulse that will cover this minimal loss. Next will be the upcoming impulse. Let's move on, guys. The next instrument is gold. Concerning gold, dear colleagues, I observe that everyone is currently reaching their trading limits, with many eager to engage in gold transactions. However, for those who haven't yet entered the market, allow me to illustrate the optimal buying point for gold. Ideally, you should consider making your purchase at this approximate level, which is somewhere around here. If you haven't bought gold at this point, purchasing it at this later stage could lead to unprofitable outcomes. These will not be the best entry points, a large stop loss, and there is even no physical possibility to set a stop because of the nearest minimum. So, it would be best to take a brief pause from trading gold and allow it to undergo some price correction on a shorter time frame. This approach is important because on the daily time frame, we will ultimately be trading the 3 levels here regardless. Yes, it will be an upward movement, but after a correction. We cannot simply purchase gold at this moment due to various considerations. And if a significant deep correction in the market starts, what will you do then? Gold is currently valued at 35.52, having seen an impressive rise of nearly 2,000 points recently. Of course, we took our 1,500 guys. We decided to purchase gold alongside our subscribers, and I generously offered it for free to my followers on Instagram. Here, we decided to close the position slightly earlier than planned. However, I managed to work with that trio on 4. Let me show you what I mean now. The overall context for gold continues to show a bullish market trend, which indicates that we should focus on making purchases. It could be quite interesting, everyone in the chat, if you could write in the chat who is currently selling gold. Please just jot it down. I'm genuinely curious to find out how many individuals are actively selling gold, whether it's most people or just a few. I've already received numerous pictures, various screenshots, and several individuals have mentioned they lost out on gold because they began selling it prematurely. Although selling gold here was an undeniably wrong move for various reasons, you understand that the impulse you feel is working against the idea of selling, which is ultimately illogical. Thanks everyone for subscribing. I also notice, plus I can inquire about who lost their deposit, possibly related to gold sales transactions. So Busa, I am a wolf by nature, I'm named Sky, I'm plus sized. Hey everyone, I previously pointed out that there would be numerous gold sellers in the market, and it seems they likely suffered significant losses from their recent sales. Now, they are likely biding their time, waiting to invest additional capital to take advantage of this market impulse. So I sold my assets during the 4th wave, and I also exited on the sale. Look, Glinka exited. You see, Aslanov minus, Sugrob plus, Voloshin Igor minus. Igor, you wanted to buy a subscription, you probably already exited. So Busa didn't exit, well done. I'm waiting for the correction to complete. And are you sure the correction has started now? Alia is excited about great purchases and additional benefits. Another one, guys. You can't trade against the trend, guys. Golden words. So, go ahead and take a screenshot, then print it out and place it right next to your computer monitor for easy access. So I bought again. Anatolyevich, are you absolutely sure that the correction process has even started? I notice that everyone seems eager to trade gold these days, but I'm choosing to sit out of the market entirely. I'm not engaging in any trades for now. I believe the market will rise further with a correction likely later on, as anything can happen in trading. I have made a purchase already, and I plan to buy even more when the anticipated 4th wave arrives. I'm not sure what to expect, but I'll be aware when the 5th wave comes. It's best to finish the 4th first. So buy is hanging. Tomorrow the news will give a correction and it will be clear. Cool, not bad. Currently not investing in gold. I think Yulia has a great position too. I ended up losing over $200 and unfortunately closed down 4 restaurants during that difficult time. Not bad either. Lost on purchases. Vitali, how could you lose on purchases here? I don't get it at all. You know, we probably should have entered the market with a larger lot size initially to allow for a small pullback without risking the loss of our deposit. But I'm quite sure that's exactly how it probably occurred. Honestly, I would write a book on how funny it is to lose money. Everyone will have numerous interesting and amusing stories to share, ensuring enjoyment and laughter for all involved. So, out of the market, good evening. Gold is such a position. I'm not trading gold for now, guys. So outside the market, scalping is risky, but sometimes it tempts me when I'm in profit. Be cautious, as maintaining your nerves is even more crucial than focusing on medium-term trading strategies, in my opinion. So Vitali, while not everything revolves around it, Bitcoin will certainly be a significant presence today and in the future. It would undoubtedly be a remarkable book filled with valuable insights. I truly believe that if everyone shares their unique story, we could collaboratively create a comprehensive narrative. A beginner could read it and gain understanding, realizing they can learn from the mistakes of others. It's essential for us to highlight these errors. There are countless diverse stories waiting to be told. So let's move on to discuss day trading for gold, as that is precisely where emotions can significantly influence decisions. I completely agree, by the way, everyone. Perhaps someone here understands that in trading, emotions are often absent, yet deep down you crave those emotional experiences, which is why people engage in trading. Yes, it's also emotions. I mean, selling on a correction, making money, getting positive emotions, but if the correction doesn't start and the market goes up, there will be negative emotions. So yes, there will definitely be a recorded version available for everyone. Alright, everyone, let's keep moving forward. When it comes to gold, the long-term strategy is to seek buying opportunities that will support the continuation of the third wave, aiming towards the target range of approximately 3650, specifically around the 3650 mark. This indicates that we still have around 1,000 points left to potentially gain, but ideally I would prefer this upward movement to occur with a market correction beforehand. Next, let's analyze gold on the 4-hour trading time frame. Let's look for a correction. So our 4, we see 1, 2, the start of the trend, 3, the wave, the middle of the trend, the longest wave, guys, just like in the book. I don't know how gold is drawing right now. Just like in the book, the third wave is the longest. After this analysis, I'm anticipating a model resembling this. Perhaps this segment is wave A, the next is wave B, and this final part is wave C. Therefore, I am already considering that I can sketch out such a channel moving forward. Once I draw this specific channel, I will clearly understand that the market correction has officially started. While the price is in this channel, the correction can fall, then the channel breaks and I work on the 5-minute chart, starting to buy from here. So I've already thought out my trading plan for how I will work with gold. This is very likely to happen next week. I won't trade tomorrow either. If gold drops tomorrow, that would actually be good for us, as I mentioned earlier. It will complete the ABC pattern, and then we'll focus on the 5th wave. Hey guys, please wait for the upcoming 5th wave, as the correction likely won't be very deep. Additionally, consider which specific correction we can source liquidity from. The initial liquidity we can tap into will be from wave C, followed by a potential move toward the 5th wave, which is expected to be located within that particular area of interest. This strategic approach will help us maximize our opportunities. We are currently waiting for the necessary correction to occur, and will then proceed to work on the upcoming 5th wave. There is also a second scenario where gold might continue the trend and update the maximum. If you have accumulated numerous short positions again, and if there are many open now, we will proceed with a transition. However, if there are fewer sellers in the market, we will aim for a C correction and then enter the market in a normal manner. Therefore, I wouldn't sell either of my holdings, as I'm unable to confidently predict that gold won't make a significant price move tomorrow due to unforeseen news events. Instead, we should patiently wait for the current correction to conclude and then focus on capitalizing on the 5th wave of movement. This revised approach will definitely be a more correct trading plan to focus on 3. We have worked on the 3rd wave, but we haven't worked on the 5th yet. So let's move on to the next financial instrument, which is silver. Regarding silver, dear colleagues, I would also like to extend my heartfelt congratulations to everyone involved. Today, I successfully closed with an impressive 8% gain on silver, and I similarly achieved an 8% gain on gold. This means I made a total of 16% profit solely from gold and silver investments before flying to Warsaw. So far, that's all I have to say. I think, well, let's take a closer look at the 5th wave. How does the 5th wave appear? The 5th wave is typically numbered as 1, 2, 3, 4, 5, which is why I have already closed my trading position here, as I observe 5 subwaves and anticipate a potential correction could begin. If gold starts correcting, silver will start correcting, and I don't want to lose profit. We have decided to exit our current position on silver for the time being, and will be taking a brief break from trading. So let's move on. Discussion on cryptocurrencies. Let's begin our discussion with the popular cryptocurrency known as Bitcoin. Regarding Bitcoin, remember that at the beginning of the week we opened a buy here, forming 1 impulse, 2 correction, 3 impulse, ABC correction, then there was a breakout of the channel. I think it was Wednesday. Yes, on Wednesday there was a breakout of the channel moving upward. Now it's moving down, so it looks like either a retest of the channel followed by a continuation upward, or a false breakout and a stop loss being triggered. So I see 2 scenarios. For now, I'm maintaining my current purchases. Let's take a closer look at the 4-hour time frame for further insights. On the H4 time frame, we are observing a notable downward movement characterized by a clear downward trend. This trend consists of an initial downward impulse, followed by a corrective phase, then a second impulse, another correction, and finally a 5th impulse wave. Subsequently, there was a significant breakout of the established channel. So, I assume this could be labeled as Wave A, followed by 3 waves that would constitute Wave B, along with this recent test. The next phase will be Wave C. My trading plan is to operate within this structure, anticipating Bitcoin to progress towards Wave C, which represents a correction, and we should aim to cover approximately 50% of this entire downward movement in price. Therefore, I'm currently holding buy positions on Bitcoin with a protective stop in place, but of course Bitcoin's market can be extremely manipulative. There was a significant breakout where we saw a price increase, but now we've experienced a sharp decline. However, this movement is still classified as an impulse, and this correction is simply a part of a broader upward trend. If the correction significantly exceeds the initial impulse, then it will result in a downward movement, causing the market to continue its decline further. Alright, let's move on. The next financial instrument we will discuss is Ripple. Examine Ripple's details. Ripple is a great option, and I suggested buying it at the start of this week, everyone. Here was my entry point. Here is my stop, and my take profit is set right here at 4.20. In principle, the trade was quite risky due to the specific market level that had formed at that particular time. Please keep in mind that this refers to the daily level. Daily levels frequently result in market rebounds. I focused on a rebound from this significant level, likely completing 4 waves and initiating the 5th wave. My analysis and idea were based on this observation. To begin trading successfully, you need to formulate a solid idea based on analysis from a higher time frame. I developed a trading idea based on the daily time frame chart. I am trying to implement it. This is what we do. We carefully implement trading plans that are based on comprehensive wave analysis techniques. Everyone will build different trading plans, some will do well, others not. Individuals who actively engage in comprehensive risk management and meticulously analyze various time frames will likely trade with far greater success compared to a novice trader who relies solely on a single time frame for their trading decisions. That's why I'm currently down $100. I also have a stop loss set at approximately 1%, which translates to around $900. Therefore, the potential profit stands at an impressive 8%, creating a favorable 1 to 8 risk to reward ratio, and I am currently waiting for Ripple's movements. Let's take a closer look at the 4-hour time frame for Ripple to see what's currently happening, or we could even analyze the hourly time frame. On the hourly time frame for Ripple, dear colleagues, take a moment to observe what is currently forming. In my analysis, this movement labeled as 1, 2, 3, 4, 5 could potentially represent the first wave of an upward trend. Following that, the subsequent movement noted as 1, 2, 3 could indicate the development of the second wave. To help visualize these patterns more clearly, I have drawn this channel to illustrate the expected price movements and their respective phases more effectively. If Ripple breaks out of this trading channel tomorrow or in the near future, it could lead to excellent buying opportunities for investors. Additionally, for those who have not yet engaged in trading Ripple with our platform, you may want to wait for the channel break. Thereafter, the third wave of growth is likely to commence, because the initial wave formed successfully and only the subsequent one formed. We were intently working on this initial wave, which once again demonstrates that it's often wiser not to engage in trading the first wave at all. This is because the subsequent wave tends to pull back, resulting in us ending up in the red. There are instances when you may think it's a first wave, but it's actually a second. Then, the second wave arrives and generates a new downward impulse. As a result, we end up getting stopped out because we hurriedly entered the market just for a bounce off the key level, when we should have patiently waited for the confirmation of waves 1 and 2 before making our move. Only now, at the end of the week, have the first and second waves formed, so I hope you caught this logic. That's why we're holding on to Ripple for now. I truly hope that this daily support level holds steady and that this recent downward movement we're experiencing is merely our first correction in a larger upward trend. 1, 2, then 3. This upcoming movement is sure to be exciting. If we manage to catch it at the right moment, we can potentially make some significant gains on the 5-minute chart, and Bitcoin should also demonstrate notable growth. So that's all for crypto for now. I don't trade much in the crypto market because, look, Bitcoin is showing significant growth, and Ripple is also steadily on the rise. I believe that opening any additional coins at this moment does not make much sense. There's really no advantage in entering 5 different coins for purchasing. This is because if Ripple experiences a decline right now and we get stopped out, then all those other coins will also likely hit their stop levels as well, resulting in further losses across the board. To minimize the risk of experiencing significant drawdowns in your cryptocurrency trading account, it is advisable to trade with only 1 or at most 2 instruments. I only have Ripple for purchasing because there's an attractive 1-to-8 ratio, and I believe it's a wise decision. Done Bitcoin. I showed it for buying. That's all for the world of cryptocurrency. I will take a short break, as there's currently nothing to do here for now. So guys, let's move on. The next powerful tool is Tesla, specifically for Tesla stocks. Currently, the trade is in progress with a profit of 450. Here, we are essentially working within the first impulse, second correction, which forms an ABCDE triangle, followed by the first impulse and second correction. And when the consolidation begins, I would like to see a move upward. Overall, I'm pleased that we have rising lows. Notice 1, 2, 3, 4, 5. The more rising lows, the stronger the trend is considered. So it's possible that we will continue to rise soon, and there will be a wave 3 targeting the 161.8 level. For now, we hold the purchases at $450. Sure, here's the expanded text. So guys, regarding the oil market, I want to share some insights. Since yesterday, oil prices have started to drop significantly, down by approximately 300 points, I believe. Today, we are actively trying to sell oil based on a specific analysis of market movements. There is one clear impulse followed by 2 corrections and then one subwave, which is succeeded by 2 additional subwaves. This is then followed by a channel breakout, channel consolidation, and the subsequent opening of a new candle outside the established channel. This pattern could indicate the potential beginning of the third subwave, which is expected to be positioned below the first subwave. Therefore, we are currently attempting to sell oil, having exited our previous purchases this morning, which has resulted in a current loss of $130. It seems that something particularly interesting might only start to unfold next week, but it is important to note that the breakout has indeed occurred, guys. The breakout is clearly visible and occurred beautifully. The most important thing to do now is to patiently wait for the breakout to clearly confirm this specific trading position. Next, on the 4-hour time frame, we have the first impulse wave forming. Then, notice we had a correction in this structure. 1, 2, 3, 4, 5. Again, I'll repeat that the market usually moves in 5 waves, either up or down, and you can observe them on different scales based on your level of preparation and experience. Here, I believe that the second wave of the market has successfully completed, which was approximately around the 50% Fibonacci level. Then we observed a clear channel breakout followed by a period of consolidation, and we decided to initiate selling positions with a stop placed above the second wave. The target is this. The trade in this area is approximately 1 to 3, or alternatively 1 to 2.5, roughly indicating the market position at this time. If this indeed marks the completion of the second wave, we might observe a downward trend occurring within the subsequent third wave. Therefore, regarding the oil market, everyone, we will maintain our sales strategy here and aim for the target of 345, which indicates the direction of the daily time frame, marking our third wave down. Hey guys, I want to take a moment to show you that there are indeed losing trades occurring in the market. At this moment, I currently have a loss of 145 on oil investments, and for Bitcoin I still have 0. Yes, it's still at 0. I spent an entire week investing in Bitcoin and ended up with absolutely nothing. So from my personal experiences, you should clearly understand that you won't be making money every single day. The market is very volatile. Sometimes you can earn every day, and sometimes you sit for a week with a profit here, then a correction, and in the end, the whole week passes. This is medium-term trading. Welcome. Next, regarding Ripple, in principle, we also bought Ripple at the beginning of the week. Then there was a rise, now a correction, and it seems like minus $120. Yes, but it's crucial to also engage in profitable trades, as your overall profit will heavily depend on the success of those profitable trades. While losses are an inevitable part of trading, they should ideally be offset by the gains from profitable trades. For instance, our current position in the British currency is yielding a positive return of approximately $900. Additionally, we have achieved an impressive 8% profit on gold and another 8% on silver, which collectively amounts to nearly 16% in total returns. Additionally, we need to consider the dynamic currency market. Currently, we have achieved a profit of $600 on the euro, $800 profit on the dollar-franc pair, and $500 profit on the New Zealand dollar. It's important to note that even in my exclusive trading channel, there will inevitably be some losing trades. Therefore, when you decide to subscribe, it's essential to understand that while there may be occasional losing trades, there will also be numerous profitable trades that are sure to bring you satisfaction and encourage your trading journey. When you begin trading, it's crucial to implement effective risk management strategies and learn how to respond appropriately to losing trades. To handle losses correctly, you must prioritize managing risks effectively in order to prevent significant depletion of your trading deposit. Only then, after gaining sufficient knowledge and experience, will you trade properly and be able to learn the art of trading for a long time. The first task is not to make money, but to learn to trade. Learn to trade effectively while carefully managing risks at just 1%. And in a year or 2, or perhaps even 3, you will gain valuable experience. You will not be adding funds to your account with the broker. You can trade successfully for 2 to 3 years using just one initial deposit without needing to add more funds to your accounts. Capture this thought carefully, as I observe many individuals losing money, and it's crucial for us to explore effective strategies to avoid that unfortunate outcome. You need to switch to a risk management of 1%. With such a significant risk involved, you can engage in trading for a year, 2, or even 3, and during that time, you will learn valuable lessons and might earn something. So, focus on education and learning. Perhaps some individuals came seeking emotions while others desire to experience feelings, and perhaps it may be more beneficial for you to engage in trading without strictly adhering to risk management. Ultimately, that's your personal choice. Hey everyone, just a quick reminder that we have a private channel dedicated to sharing in-depth wave analysis. By joining this channel, you can immerse yourself in the thrilling world of trading and enhance your skills. Don't miss out. In our private channel, I make a concerted effort to generate as many uplifting and positive emotions as possible. If you haven't joined our community yet, feel free to message me directly or contact me on Telegram, and I'll be happy to provide you with the detailed rates for our wave analysis services.